May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar JPY, the Japanese yen. US dollar against the Japanese yen, that's what we're looking at. Take a look at the monthly time frame with me. All right. Since 2021, we have been bullish. All right. Is there, that should be quite obvious. We have a demonstrative break of market structure there. All right. A pullback, another break of market structure. That is two bullish breaks of market structure. BOS. All right. That's a break of market structure there. All right. And because this is the break here, this is the low, and this is the high. Just on that basis right there, you can say we are technically bullish until this low is taken out. Until this low is taken out, we are bullish. Yeah, we got to travel bearish to get there. But understand something. When price makes a higher high, a higher low, and a higher high, that is an uptrend. We haven't made a lower low yet. Okay? Now, those are the technicals. It gets a little more nuanced in here, right? So let's take a closer look. And what we have here is this shift in the market here. All right. Market shifts from bearish to bullish, from bearish to bullish. Okay. And we have a lovely impulsive move to the downside here. All right. That's an impulsive move. What do you expect after an impulsive move? A correction. All right. And that's what we got here. And it did not take out the high. And we did not take out this low. All right. Yeah. When I say take out, I mean we didn't break market structure to the downside. What we did do, what was accomplished, was there was a sweep of liquidity here. We hit that liquidity low. Yes. And then we have a failure swing here. A failure swing, meaning it didn't make a new high. This low, the only job of that low is to make a new high. It failed to do so. That means it's on the slate for liquidation. All right. That's the way this usually works out, right? So price did push back down, but we did not push back lower than this low. We did not make a new low. We did not even sweep it as liquidity. So there's no reason right now to take any shorts in this market. I'm trying to get rid of this thing. No reason to take shorts in this market. And for the last couple of months, we've been here moving sideways. Now, this latest candle is the way the month of July is finishing. We got 4 more days, but and it looks like it wants to finish bullish. But if it finishes anywhere near where it's at right now, we have closed back within the range of the previous candle. That's not a bullish sign. That's either we're going to see more consolidation, or we're probably going to be heading down towards that low with the next candle. You understand? All right. Let's go to the weekly. And what do we see? All right. We see the high. All right. We see the high. We see this market structure shift to the downside here. All right. That's a market structure shift. Boom. All right. We see another one here. All right. And price continues down, but did not take out that low. We see the fizz to go up higher and take out that high, but we do see a market structure shift here for bearishness, but we did not come for that low. These are the things we have to follow, folks. All right. Can you take sells from here? Yeah, certainly you can. All right. If you're trading like a day trader, even a short swing from the weekly, yes, you can. No doubt about it. All right. But what is the more high probability trade? in these scenarios? Well, if price is ranging, you want to wait till you get to the highs to take your shorts. You want to wait till you get to these lows to start looking for longs, right? Because it's in a range. But what are we looking at going forward? We see this gap. We see the price gap. We see that we didn't take out this. We didn't trade or sweep that low. We see the push up. We see the consolidation. This is nothing but consolidation. All right. But the last couple of weeks is what we want to pay close attention to. Here we can see a bullish fair value gap. All right. We can see price pushed with an impulsive move higher to take out this high. That is a market structure shift. All right. We took out this high as well, liquidated it. This is a sweep, not a, even though it closed above, this is not a convincing move to the upside that indicates more to come. No, this is more of a sweep. And that's confirmed by the next candle. It moves down to take out and sweep the low of the previous week. All right. This was how last week closed. All right. Now, what we also want to notice is that we have a respect wick coming up from this bullish fair value gap. All right. And what I'm looking for next week is if price opens here, comes back down into this area of the fair value gap. If it takes this low or doesn't take this low, I want to see price push back above this high. I want to see price open, start with a bullish candle, and the next candle takes out the high of the previous candle. I want to see continuation of the bullish trend from this weekly fair value gap. Do you understand? You got it? All right. I want to see this high being taken out. I want to see that low swept and a bullish close. That's what I want to see. All right. If it doesn't happen, it doesn't happen. If price comes down and closes below this low, closes and takes out this fair value gap, then we have we're looking at a scenario where price may invert this fair value gap and act as resistance. And you want to see price push back into it, maybe after taking out these lows. All right. After taking out these ascending lows, which are a great draw on liquidity. If price comes down there to sweep those lows and we come back to this fair value gap, then we are heading down because it's an inverted fair value gap. All right. But that's a whole different thing. That's a mess of stuff that we have to wait on. All right. Right now, we have a bullish evidence that there's no reason to take shorts, period. End of that story. All right. If we go down to the daily, Sorry. What do we have? Let's get rid of this. Help me here. Gosh darn, what is going on with me? All right. So we have the market structure shift here. What we can see is that this was a legitimate sweep of these lows, of that low. When I say legitimate, that means it served the purpose. We saw the push back up. This low took out this high. All right. Took out this high. This is a strong low. Got it? And it accomplished what it was supposed to accomplish. Now, with this, we have an impulsive move to the upside and we have the correction. All right. Now, what I want you to do is put your Fibonacci retracement tool on that. And we say to ourselves, did we come back to the 50% of this trading range? Yes, we did. Interesting. All right. Can it come lower? It certainly can. And why would it? Well, there is a liquidity low here. All right. And a liquidity low there. We could sweep that for relative equal lows, a great draw on liquidity. We sweep those. That would give that could give enough fuel to move higher. That's all. That's all there is to it. All right. No need to complicate this any further. If we look at this fair value gap that was here, all right, it was used already here. Let's get rid of this. It was already used to move higher. All right. We don't look at that as a second bite when it comes back to it. No. What we look at is the low. The low that was created to make that contact. Now we have relative equal lows here for a draw on liquidity. Okay. I would like to see price push back down in order to sweep that low before moving up higher. Now, fundamentally, do we have support? Yes. The US dollar is stabilizing, solidifying. They inked a deal with the US dollar, the US Trump and the US already inked a deal with Japan that will allow Japan, the BOJ, to consider tightening their interest rates. All right, it would allow them to do so. All right, you can see that the U.S. dollar is starting to outperform the Japanese yen. So these are the things we're watching with the new deals being made, easing tensions between the two countries, and the U.S. dollar, the U.S. economy. As people are switching from safe havens, running to safe havens, to doing the opposite and putting their money in riskier assets, that will allow the U.S. dollar to stay solid and outperform the Japanese yen as money goes from safe havens like the global safe haven of choice, which is the Japanese yen, when it goes out from there and into riskier assets like the U.S. Stock market, and that'll ultimately weaken the Japanese yen a little bit, and which will allow the U.S. dollar and the USJPY, USDJPY to move up higher. So I am looking at these highs as the draws on liquidity, and these highs here. So that's where I'm at right now. We did have a sweep of these lows before price pushed up higher here. We have a correction to this last impulsive move. I am looking for higher prices. Doesn't have, if price opens up here and continues higher from here, it doesn't have to come back. This could end up being a breakaway gap. It doesn't have to come back down here. All right, but I would prefer it. But we have Wednesday coming, which is the FOMC. That's when the U.S. is going to determine their interest rate. But same day, the BOJ, the Bank of Japan, will also do the same with their interest rate on the same day. So they're both expected to maintain their current rates, and that would, and you'll see the USJPY inching up higher as a result. I hope you enjoyed this video. Make sure you hit the boost. Make sure you hit the like button. And if you have any questions, please let me know what they are inside of the comment section. I appreciate you guys tuning in each week. And I'll see you in the next video. Thank you for watching.